Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, November the 25th. The year's 2022. Let's talk trading. It's time for the weekly wrap-up, and it's Black Friday. So, if you're here in the US of A, it's time to shop till you drop, right? As always, these videos are for educational purposes only. Your results may differ from mine. A quick look at the weekly here shows all gaps filled, and I believe all gaps had filled earlier in the week. Notice that the pound is above the previous week's high, the price right here. So we broke out. Notice to the upside though, if you look left, we're into some wick zones from a few weeks ago. And if we look at the monthly chart, you can see we're 608 pips above that monthly open, 927 off of the low, 800 off of the high. So we've got a huge range for the month. And back to the week, let's see, there was something else I wanted to mention. We took out the weekly pivot. We'll show that later too. Oh, I know, we covered the body of the previous week here. What I mean by covered is price opened above this close, came all the way down and went below the open. So that wick covered the body. And here, looking at the opening range breakout, you can see we're way above the opening range for the week. We broke out Wednesday, haven't looked back, and we're 512 pips above the high of the opening range for the first day of the month. We are at the yearly midpoint. In fact, we're 24 pips above it. $1,720 pips off the low, 1,671 off the high. So that's been quite the move to the upside. So anybody lucky enough to stick in with a swing trade from this low, you're looking pretty good right now. And we're 1,448.49 pips below the yearly open. Inside bar traders, Wednesday we broke out of the inside bar from 15 weeks ago. And also on Wednesday we broke out of the inside bar from 5 days ago. And we're still above the, actually, I read that wrong. We actually broke into the inside bar of the weekly that happened 15 weeks ago. So we're in that inside bar range right now. And still lots of inside bar action. In fact, today, wouldn't surprise me if today's an inside bar considering it's Black Friday. I guess most traders are shopping instead of trading. The range right now is 70, and we have 5 pairs over 100 pips in range, with the dollar yen clocking in at the highest at 122 pips in range, that is. Notice crisscrossing that daily open. Finally, we came to the downside here, right here at the 2100. Pretty much gave that up, and we've been oscillating around the 75, the 2075 psycho number. So you can see we're in the wick zone right here from these H1 candles. Rats, there's enough range And you can see here that it's time for the green rats to feast. Bambino flex indicator indicated to go long here, and price near the pivot is a long, but that kind of gave it up. We took out today's pivot. We missed the pivot yesterday, and we missed the pivot on Wednesday. So we've got 3 missed pivots for the month of November. So this year, we've got a lot of missed pivots on the daily. On the weekly, we took it out, but last week we had a missed pivot. And 14 weeks ago, we had a missed pivot. We only missed that by 0.6 today. And the monthly we took out a long time ago. In and out of that upper wick zone, as you can see here, it also crossed below the previous midpoint, previous day's midpoint, that is. And you can see all the price action around that area also. The range this week, 375, respectable, but still low, and 16 percentile. But we broke out of the previous week's high by 125 pips. We didn't make it through the low, so we don't have an outside bar this week. High minus the close for you rats, 79, and close minus low 295 at the moment. So if you trade the weekly rat zone, you got paid off. High minus open 259 and open minus low 116. So if you traded the weekly open crossover, you could have been paid off also. Looking at the Walmart lines, you can see here the 80s paid off a few times this hour, and looks like it paid off last hour to the north, and it paid off that previous 2 hours ago to the south. So like I had mentioned, there's just been a lot of price action right around this 75 line. A lot of crisscrossing. Notice price hasn't closed below it. Lowest high, highest low trading. You can see here, just triggered a minute ago and gave an opportunity to take a couple of pips coming off of that 3 ball. And then the highest low, you can see right here, it just couldn't seem to close above there. So it gave opportunities once again. I was watching a video about the turtle traders just to see, since they were more of a swing, quote, trend following, just to see if there was something I could pick up, learn something new, or reinforce something old. And basically it reinforced the idea of having a plan and sticking to the plan, because the turtles that made the most were the ones that stuck to the plan. And I thought that was kind of interesting. It's one of those things where I used to say you have to be a trained monkey when you're at your terminal. It's not time to think, it's time to do. It's, see your trigger, take your trigger, and do the trade. It's not time to evaluate or anything. You just have to have a set of entry rules. And as it's been proven, a set algorithm, and it could be a really simple algorithm, like the Walmart method or this higher low method, and you just have to take the trade. You have to take every trade, because the one you decide not to take might be the one that paid off huge. So for example here, if you didn't take this trade, you missed out on about 7 pips. There was an opportunity to take 7 pips. And that is something that I guess it's really hard for some traders to follow the rules and just really keep it simple. Because what happens is we start to see things and we think we can outsmart a simple algorithm. Maybe in 1 or 2 trades you can, but overall you can't, not in the long run. Something will bite you. And as we can see here, price is still moving up. And as noticed once again, here on the 1 minute we had some closes below 75, but it just seems to be a lot of price action around this area. And there we go to the south again. And we have not increased the year-to-date accumulated range. But if we take a quick look at the range by month, you can see over 1,000 pips, second largest range, monthly range this year. And over the past 20 years, it's the second largest range. And trade reminder. Now, Ira was giving me a hard time about moving averages, squigglies. But the one thing to note is a reversion to the mean, where after price gets so far away from it, chances are it's going to come back and hit the moving average. And when you know that, especially if you have the statistics, it's like when you can use it to know when to take profit. So like on indicator 2, if it gets, so many pips higher or lower, I'm in the trade in the right direction, I'll exit the trade because I know chances are it's going to come back down, and then wait for a re-entry if I want to continue in the same direction when it comes back and touches those indicator 2 dots. And we're looking at the H4 chart here. You can see we're like 6 red H4s in a row. Oh, there's one thing I was going to show here. If we look at the H4 pivot, we got this missed pivot right here. We got a bunch of them this year, but I think this is going to be a magnet, and it's going to pull it back down to this level. I could be wrong, could stay on this chart, but that's just the way price seems to have been moving, considering it made a few attempts to take out this one. So I think it might swing back down this direction. So I'm slightly biased short. So fellow traders, hope you had a nice turkey day and wish you a safe Black Friday if you're out there shopping. And I also wish you a fun and safe weekend. And if you haven't, please hit the subscribe button and hit the like buttons on the videos to move me up in the YouTube algorithm. I'd appreciate it. And thanks for watching the videos. And when you come back to your trading, platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over.